What's up, everybody? Welcome to another Loose Ventures video. Hope your week is going well. At least I hope it's going better than the markets. So today I want to talk about my screening process and the sources that I use. I think some of you have been waiting for that. So just going to kind of dive into that today. I just want to remind everyone to check out the intro video and value investing style video as well. And you can kind of watch those videos alongside this one just so you get a pretty good overview of my process, my style as an investor, value investor. Surely those will help you kind of develop your own process. And for those asking about this spreadsheet that you see on my screen here, I decided I'm going to make a separate video just covering this spreadsheet, which is my watch list, which is actually one of the main ways I screen for stocks now. So I'll make a separate video on this so I can go more in depth. So today I'll just talk about all the sources I use, which includes this watch list. But yeah, that I'll dedicate a whole video to that one. Hopefully that helps keep the videos shorter, more specific. So first off, I guess, let's go right into, or let's touch on the watch list at least. So this is, like I said, this is the main source of information for myself when I'm screening for stocks. I have a good amount of stocks on this, not all stocks ever, but yeah, there are quite a bit of stocks here. So this is basically what I come back to every time I want to look for new stocks. But obviously, if you're just starting out and you need to find stocks in the first place, you're going to need other sources, right? So, all right. So initially, the way I started off was I would use Finviz, and I find Finviz pretty helpful, particularly because you can set your own screener. So like this one, it looks like I have, I'm screening for mid-cap companies. So in general, particularly when it comes to value investing for myself, I want to look for stocks that are a bit smaller, maybe around the 2 to maybe 20 billion range. This is set to 2 to 10 billion range, and here and there I'll look for stocks that are even smaller, sort of cigar butt plays. Borderline penny stocks. Let's say here and there, but I typically always have at least one or two of those on my watch list because those can be very interesting plays as well. Those can be, the biggest gainers, right? The real multi-baggers. So yeah, what I like about Finviz is you have a lot of different options here that you can set. And, obviously you could do market cap, you could do price to book. Obviously, the more specific you go, the fewer options you're going to get. But overall, you just have plenty of options to filter stocks. Filter stocks by. So if I reset this, you're going to get a ton of pages, right? So maybe you're just looking for potential cigar butt plays, companies that have a decent amount of cash. Look at that. Price to book under 1. We're rating, and price of free cash flow under 10. We're getting a good amount of stocks here, right? So we can filter out other countries. We want to just look at the U.S., for example. So, yeah. So there are a lot of different things you can do here. Insider ownership. Finviz, this is free. You don't even need an account. I think if you pay and set up an account, you have more options. Like, for example, you can select US and Asia and Europe versus currently, without a paid account, you have to decide, right? But I tend to find whatever I need just by using a free account. So, and you'll see that it's kind of a theme for all the sources that I point out. I don't really like paying for stuff. I kind of started off with nothing, in terms of sources. I wasn't paying for anything. So kind of learned how to make the most out of free sources, and I got very used to that. So hopefully overall these sources are pretty helpful for people that are starting off, or you're not managing a sizable fund or portfolio, anything like that, right? So yeah, Finviz is probably, I think, one of the best go-tos for me. And yeah, you got a whole bunch of options here, even for you technicals guys. I don't really use the technicals filters, but yeah, just pointing out there plenty of different ways to screen for stocks here. So that's probably that could probably be like the primary way to screen for stocks, just because of how many features you have. So yeah, that's Finviz. Let's see, what else do we have here? I have several different types of screeners. I guess we can look at Ticker. So I've mentioned ticker.com in a few of the other videos, or pretty much every video. So I use them a lot. Them, you do need an account, but it is free. They have a paid subscription, but again, I don't pay for almost anything. So here I have this like free cash flow screener set up, but you can set up whatever you want. Ad screener, similar to Finviz. I think you get some unique options here versus Finviz. So say like if you want to do enterprise value, which is what I look at. So I might say I want to look at forward enterprise value to EBITDA plus 1 year out, and I only want to look at companies that have less than, say, I don't know, 5. So if I just pull that up, obviously I can add more metrics, more filters to the screen here. But as you can see, a lot of the results are going to be locked. I think most of these, if not all of them, are going to be foreign stocks. So maybe some OTC, maybe it's just foreign. But yeah, here you're going to go to a whole bunch of options. And these are just basic screeners, right? So once you start pulling up stocks like those Micron, Occidental, Pioneer, you're still going to want to look into them, right? So you can decide how specific you want to be with your screeners. Typically, I'll go back to the free cash flow one. Oh, whoops. Let's do it this way. So now it's like overwriting it. Okay, whatever. Well, I guess just reset my screener, even though it was bookmarked. That's okay. What happens if I close this and then reopen? Well, that is odd. Whatever. That's fine. No big deal. But yeah, I like to look at free cash flow. I'm a big multiples guy. But more than anything else, I want to specifically look at cash flow. So I think it's a pretty good angle to take. I don't think there are a lot of people that would disagree with me there, but maybe you want to look at revenue growth specifically, price to book, all sorts of different ways you can screen. And ticker.com, like I mentioned, it does have options that are unique to it versus Finviz. So yeah, that's another good option to use. Let's see, what else do I use? For screening. Here's an interesting one. Value Investors Club. So I didn't know about this for a long time, and I feel like there probably aren't too many people that actually know about this because they just have their own website. They don't have, like a subreddit, at least not that I know of, or anything like that. But Value Investors Club, it's what it sounds like. It's people looking for value, and they just post their thesis on whatever stock they're looking at. They post an analysis valuation. So ServiceNow, for example, this guy, he's got this whole transcript or something. Let's see. Okay. Business merits. Okay, he has an analysis, but this looks to be mostly quotes. Or I guess there is. He does have his own analysis. Valuation. Okay, there's that. Risks. Okay. Catalyst, sustained growth. That's not much of a catalyst, is it? It's more of an expectation. But yeah, some of them, to be honest, that's not the best one I've seen. Some of them are pretty good, and I think the only catch is unless you are a contributor, as in you've submitted your own analysis and it's been approved, you will only see analysis from 45 days ago. So there's a 45-day lag. All things considered, I don't think that should make a big deal because a lot of these, like for example, my time horizon is 3 months to 24 months. I don't really expect any of my value plays to just suddenly explode in value within 2 weeks or anything like that. So I don't think that 45-day time period really makes a big difference. I'm pretty sure it's 45 days, last I remember. So yeah, you can get some good ideas from here. A lot of them have really good analysis, really good valuations, and I don't seem to be finding them incidentally. But yeah, maybe if you sort by, let's say, highest overall rated, highest quality, you do highest quality. A light. Let's check this one out. Investment thesis. Okay, so this is already a better format. Okay, so this guy did a light. Incorporated. So, yeah, this is a very good format to have. This is kind of how I take notes on the companies I'm looking at. So yeah, this would be a good example. And, if anything, if you don't like the stocks that you're finding, if you don't like the analysis, or you don't agree, right? Look at the formats, and this can give you a pretty good idea of how you should be structuring your investment thesis, which you should have, right? Particularly for the controversial value plays, right? Potential value traps, cigar butts, stuff like that. So the more controversial it is, the more speculative it is, the more in-depth you have to be with your thesis and your financial analysis, right? So yeah, Value Investors Club. I like coming back here every now and then just to see if I find anything. So yeah, that's a pretty good source as well. And by the way, all these sources that I mentioned, I'll drop them in the description below the video. So, all right, let's see. What else do we have? I don't really use RIC.ai for screening, but I will. I guess it's part of the screening approach. So let's say a lot of people have been talking about Micron. What I'll do specifically is I'll use ROIC.ai because they show me long-term financials, and that's particularly what I like about it. But I'll go to financials, and I want to see their operating income, and I want to see the operating margins, and that gives me an idea of how efficient they've been over the years and how consistent they've been. So, for example, I'm noticing a lot of people talking about Micron, saying it's really, really cheap, and semiconductor shortage continues, and why aren't you loading up on Micron? Because the share price has done something nasty, right? Is this September 2022? Okay, yeah. So like a high of 97 down to is 59 now, something like that. So, or 51, it's right here. So yeah, a lot of people are saying, oh, you need to load up. Now's the time for Micron. Semiconductor chip shortage, it continues, and they're going to continue making, ridiculous profits, right? Just based off of the charts, you can see it's had a pretty crazy run. And it looks highly cyclical, which kind of makes sense considering the industry it's in. But at the same time, I'd want to know, okay, that's a big move. When does that move downward end, and how are they priced relative to not just the profits that they're making today, but the profits they're maybe expected to make, or we could put it this way, normalized profits. So that's specifically where I'm going to go over to financials, and I want to look at their historical operating income. So as you can see, 2021, we're at 23%. I'm sure it's probably higher over the past 12 months. But if we look back some years, we see 14% 2020, and just going back each year, 31.5, 49.3, 29, 1.35, 18.5. It's just all over the place. 2.6, negative 7.5 in 2012. So just right off the bat, I'm looking at this stock and I'm saying, you know what? Maybe 22.7% is not standard. And I don't even know if I can get an average of these just because of how all over the place their operating income is. So maybe I'll go down to free cash flow. And it's kind of the same thing, right? It's all over the place. 2.4 billion, 2021. Going back, 83, 3.4, 8.5. down back down to 3.4, negative 2.6. So not exactly what I would want to see in terms of, how well will the company perform over the next year or two, right? If this is such a damn good value play, are they going to continue making these level of profits? Is operating margin going to remain this high? Maybe it goes up to this 49%, for all we know. But if it goes down to 14%, for example, or 1%, now how cheap is the stock? So ROIC.ai, it's pretty useful. This is pretty much specifically what I use it for, just to look at historical operating margins, and I might look at free cash flow just to see how consistent they've been. Because if somebody's saying this stock is making so much money today and they're going to keep making that level of return of earnings, I'm just going to come here and I'm going to say, nope, fat chance they do. It's a very cyclical business. Maybe this is due to management, whatever the case is. And I either say, okay, it's not cheap enough, right? Or, you know what, it's still really, really cheap. Maybe I do want to look further into this stock. So yeah, that's what I use ROIC.ai for. But as you can see, you got plenty of other metrics that you can look at. And I don't really use it specifically as a screener, but this is more of a check on stocks that I'm already considering looking into. So let's see what else we got. A bunch of Finviz screeners, free cash flow screener, and then I have a whole bunch of other just websites here that I'll check here and there. But yeah, nothing specific that I feel needs to be pointed out, to be honest. It's just a lot of stuff. Some of this stuff is just I just bookmarked it so I could look at it later, and I haven't really taken a good look at it. But so yeah, another very important part of the screening process for me would be looking at hedge fund positions. So I have let's see, what is this, about a dozen here, but I only really pay attention to a handful, and I would say it would be these top few. The Duquesne family office at Stanley Druckenmiller, one of the best hedge fund managers in history, basically. Baupost is Seth Klarman. He used to be a big cigar butt guy, but I think now he's kind of shifting away from that a bit. Talon Company, they are a good, and those guys are very well known. Talon Company, they're a deep value investment company or hedge fund. Let's see. Yeah, Deep Value Investing, Capital Appreciation. There's the website, and you can see their portfolio, right? So they have some interesting plays. I actually just put a couple of their stocks on my watch list, like MHO. They're looking at home building, which is, I think it's safe to say it's hot fire right now. But some of those stocks, they're pretty compelling. So yeah, I'll check their holdings. Like, say we go to Stanley Druckenmiller, this Coupang stock, CPNG, dubbed the Amazon of South Korea. They're looking pretty interesting. They're not making any profits right now. I think it's going to take them a while before they're, let's say, a value play. But Stanley Druckenmiller's loaded up on them, and I believe he's just been adding, well, I guess except this last quarter, but he had been adding to this position, and it's 18% of his portfolio. So mainly because of that, I did look into the company a bit, but I want to say like 51% of the reason I added Coupang to my portfolio was because Stanley Druckenmiller's in it. So I have no shame in following big name investors. They got a stock like this. It's their biggest position. He added to it for multiple quarters. Look at his estimated average price paid. It's almost $40, and right now it's at like 17, I think. So yeah, the guy knows something. He really likes this stock. So I don't mind following stocks from investors such as like Stanley Druckenmiller. And there are only a few hedge fund managers where I'll say, okay, this is your top stock. All right, I'm buying a little bit myself. And he's got a whole bunch of other plays too. But yeah, let's see what else we got. Seth Klarman, he's bigger than Liberty, and I'm not. Or I guess I think he keeps mixing around like the holdings, or not keeps. At least he did last quarter, but yeah, Liberty Media. I'm not sure what he sees. I think that would require some further digging. It was easy with Coupang because it was just like I just saw headlines. Oh, the Amazon of Korea, so I was like, oh, okay, I get it, right? Let me just look at their financials. Let me do a couple checks, right? But Liberty, I don't know. I'd have to look closer at that one. But he's got some interesting plays. He's big on communications right now, like Google, Warner Brothers, which is a pretty controversial company right now as far as investment goes. So yeah. But he is another person that I'll take a good look at. I won't necessarily just copy his trades. Like, let's say aside from Liberty, QRVO, I believe that's semiconductors. I'm pretty cautious about semiconductors, so it's not exactly like, oh, whatever they're loading up on, so am I. There still needs to be a good narrative that I agree with, right? But I will definitely take cues from these guys. Talent Company, mentioned them. Interesting plays there. MHO's one I'm looking at. Stellantis, I just added Stellantis to my portfolio, and here he is starting to load up on Stellantis, about 3.65% of his portfolio. And honestly, I wouldn't be surprised if he's already increased it, considering that the price has come down from what he paid from when he bought. Foot Locker's there. That's interesting. PVH, I just added that to my watch list. So yeah, he's got some interesting plays here. A lot of them trading at well below price to book value. So I like looking at his plays, and it typically, not just him, but every fund, who is building up positions. All these positions that he's trimming. Those, if I'm already looking at them, then maybe I do a deeper dive, something like that. But in general, I'm like, maybe he's dollar cost averaging out, and by the time we get the next report, he's just completely out of these plays, right? So these reports are delayed, and this is as of second quarter, and he could have made these trades at any point throughout the second quarter, So because of that delay, I mostly want to look at the plays he's building up, such as MHO, ARW, what's that? Aero Electronics, I think. So he went from 0.04% to a 3.69% position for ARW. So that's a big increase. I did glance at them. Maybe I'll look at them a bit, take a deeper dive into them. But the ones that caught my eyes were ones that were trading well below book value, like MHO, MT down here. That's ArcelorMittal, a steel company, which typically I would not be looking at right now, but they're trading at something like a 0.35 price to tangible book value, which is crazy to me. Like, I need to check those numbers to make sure. So yeah, I'll still look at the financials, look at the valuation of these companies, and I did for most of these stocks, right? Like Ally Financial, I'm not so interested in Ally. But Talent Company specifically, I do want to see the potential cigar butt plays, the distressed companies, the companies trading well below price to book value. So this company, or this fund, gives pretty good signals for finding companies like that. Let's see, there's Berkshire I'll just look at. I'll see what he's got going on. I don't just follow him, but Occidental was one that was basically at the top of my oil and gas watch list. I just hadn't decided to dive into oil and gas yet at the beginning of this year. And then when the war happened, when that started, shortly after, I saw Warren Buffett he started loading up on Occidental. And that was kind of the cue. It was kind of like, okay, if he's starting to load up on oil and gas, maybe it's a good idea for me too. So that's when I looked further into it, and I said, I'm going to start buying the dips to build up a position, because it was undervalued. I think it's still undervalued, to be honest. But But yeah, and I added on dips, and so did he. Apparently, our timing was coincidentally like very similar, or the price that I paid is actually I think it's probably lower actually. But then again, he has those warrants, so he's probably getting a better deal overall. So yeah, sometimes there will be stocks like that on my watch list, and that I can't decide on, right? But then I see Warren Buffett starting to load up on, and I'm like, okay, he's investing in the business. He's gonna become basically a part-time manager of that company, right? So if I was unsure before, but I needed some type of catalyst, maybe this is the catalyst. Warren Buffett makes the company way more profitable, way more efficient, something like that, right? Like HPQ is another one that's a hot stock right now, but I think it's safe to say it's controversial. But yeah, he bought in at about, it says about 37. I saw maybe like 35. So yeah, maybe between 35 and 37. And now it's trading at let's see, trading at about 26. This thing's just like going straight down. But a lot of people would say like, oh, it's a good value stock, the good company, good history. Obviously Warren Buffett sees something in them. So that's a stock where the market seems to disagree with Warren Buffett, but maybe he's onto something there. So I don't know. I'm gonna look into HP a bit more, but that one I'm not too sure on. So yeah, I do kind of take cues from those people. Michael Burry, I was kind of taking cues from him. Not too much. I was just curious if you found something interesting. Like Geo was one of the interesting plays he had, right? But well, as I'm sure everyone knows, he basically liquidated his portfolio, and now this Geo, compared to the size of his portfolio previously, this is a really small position. So he had hundreds of millions of dollars, of stocks, and this he only has 3.3 million. So that doesn't really, that's not a cue to me. That's an incredibly small position relative to what his portfolio typically is. So no real cues to be taken from old Burry. And these other ones, I sometimes look at them. Soros, I'm just curious what he's doing, but honestly, I think he's out of his element now. He bought Rivian at like 100 or something, and then he sold at like 30. Something ridiculous. But yeah, Tiger Global. Funnily, I look at Tiger Global to see what they're buying, because they like to do a lot of the like sexy growth stocks. And I might say, okay, which of these should be shorted? So, because Tiger Global, I think they did very well through like the high growth period. And it was just a lot of liquidity, low interest rates, a lot of lending, right? Of course, growth stocks are going to take off. And they stayed in a lot of those stocks, especially in Chinese stocks. So to me, I'm like, did you not, have your finger on the pulse of the markets? There's Meta. That's one company I actually like, or a stock I like. Business, but yeah. So I don't really follow them. If anything, I'm like, what stocks are you unloading? Because those stocks might be in trouble, right? Like there's CrowdStrike. CrowdStrike is really overvalued. And, I mean, they've been doing really well. The business looks very strong, but, maybe there's a storm on the horizon for those really high growth stocks, So, yeah. As far as funds, I guess those are really, it's mostly Duquesne, Baupost, Talon Company, Berkshire. And I guess you could kind of say in that order, maybe Talon Company is a bit higher. And I will say it depends on where we are in the market cycle. So, like right now, I'm starting to look for the cigar butts. I'm starting to look for those 0.5 price to book value stocks that might be turnaround plays, right? Because prices have come down a lot. If the market crashes, I am going straight to Talon Company. This is going to the top, right? And I'm just saying, let's see what you're loading up on. Let's check some other websites. Let's see what funds are buying in general. Let's look at the really undervalued the potential deep value plays. So it just depends where we are in the stock market cycle. So speaking of those types of transactions, another favorite screener of mine will be Open Insider. So let's bring up the MHO that I mentioned. So for those who aren't familiar, Open Insider just lets you see all insider transactions, buys, sells, options, exercising. And yeah, it's got a pretty efficient overview of that. So we can see MHO, there was selling beginning of this year. Perhaps that was a good price to sell, right? MHO was trading at, let's see, in February, it's around 50. Is that what they got? Okay, so like 46, 47 bucks a share. And the CEO unloaded quite a bit. No buying since then, right? So nothing real interesting to note, at least not as of recent, right? But I will overall just look at what the recent big buys have been. Cluster buys shows you when, insiders, big insiders, maybe the board of directors, some of the executives, maybe they're all loading up on those shares, So let's see. Pharmaceuticals can get weird. Metal mining. Oh, that's a brand new stock. Yeah, another thing is you can kind of hover over the tickers and it'll show you, I think it's about the past year of stock price action. Actually, it looks like 2 years. Oh, so that's nice. Okay. Let's see. What do we got here? What is this? Spock Holdings, radio telephone communications. That just sounds like a potential a company in distress. Wow, this one has a ton of buying. Okay, so this is interesting. So sometimes I'll see buys like this, like let's see, one of the guys on the board of directors picking up over 2 million. What is this? Like over $3 million worth of shares. That's a lot of money. And then the CEO picked up a bit too, 37K. It's not too much. But this is a pretty big cluster buy. And typically I'll look for, let's say, at least like $200,000 in aggregate. So that kind of weeds out, a lot of the smaller transactions. I don't think those really matter. And this is more of like a queue. Maybe I want to make a short-term trade based on this, but that's pretty rare. But if this was a stock I was already looking at, then and I was thinking, okay, maybe it's a value play, but I don't know. Like, what about maybe the price isn't right, today? And then I see something like this, I'm like, you know what, I'm gonna pick up some shares, or I'm gonna pick up some calls, some long-term calls, something like that, right? So this could be a good signal for me to buy a stock when I'm not quite sure, because if management is loading up on shares, that's typically a decent sign, right? Especially when it's a lot of money. Like, I'm willing to bet this stock, it's not even that big. Let's see. Another source, obvious source, is Yahoo Finance. And you'll notice that I have a lot of shortcuts set up. Okay, holy crap. This is 142 million market cap. Okay. This is... All right, I'm adding this one to my watch list. I didn't expect to find something in this stream. I was just going to kind of walk through stuff. So let's just do a quick and dirty here. Okay. All right. And, I'm doing stuff on my spreadsheet here, but I'll go over that in another video. Okay, so this is really interesting because it's a very small company and there's a ton of buying. Okay, so I'll have to go into this later. Short interest looks low. What is the float? Just 15.31 million. And the stock has just been kind of doing nothing for the past month. Hit a low of, looks like $6.13. Yeah, so, okay. So, see, sometimes I'll find interesting stuff like this, and it's not necessarily better buy shares, better buy calls right now. It's just a good indicator. Maybe I should look into these companies. And you'll notice that when you look at these companies, you'll see Well, this is just buying. Okay, let's look at another company. Whatever this is. That's just buying. Well, I'll go back to MHO because I know that had what I'm looking for. So MHO, you have just straight like share sales, and then you have like sales plus option exercise. So this could just be, maybe they just need to pay the bills, right? Like Zuckerberg does this all the time with his shares, or at least he used to, and now I guess he doesn't want to anymore because the price has tanked. So I don't see these as too big of a deal, unless it's just happening like nonstop, because they could just have these like scheduled, and it doesn't mean they're going to rebuy at any point. So I don't take these as too much of a cue to sell the stock, although I will note that the price was pretty high when they exercised those. So, but yeah, these straight like sells, those I'll pay more attention to. And then when they're done in aggregate, when I see executives, CEO, COO, they're selling, and I see board of directors selling, that's like, okay, they know something, something bad is about to happen, or somebody's about to leave, one of the all-stars on their executive team, so I think that's the main thing. And again, I look for at least $200,000 in transactions. And if I want to be picky, I'll raise that to $500K, maybe even $1 million, right? And again, it's not always like a straight, oh, it's time to load up, right? Like I think if we look at Carvana, we had executives buying a ton. Look at this, $408 million purchase. That's a 10%er. Oh, that's the CEO. Okay. Maybe he was just taking over. But look at this. Over, what is that, $568 million worth of shares at $80 per share. And what's Carvana at now? They're at 33. So this guy belongs on Wall Street Bets. He needs to post loss porn. And he picked up some more, not nearly as much. He must have just been coming on board, but I guess he did lower his cost basis, but man, he's still holding the bag for sure. So as you can see, it's not always a good idea to just follow executives in their stock purchases. Plus, I'm honestly kind of bearish on Carvana's business. So yeah, I still definitely, I'll say, like, listen to myself. These guys, they could just be buying for whatever reason, or I don't know what's going on. I don't know why they're buying. And if I think the company just sucks and the business is doomed, I'm not going to follow these guys. So it really just depends. But just like we saw with what was that, Spock? Yeah, this was interesting. I might actually look into this. So yeah, and you can kind of set it by insider buys. You can look at penny stocks. You can look at sales. And you can I like to go to CEO, CFO purchases. And because I might start off pickier and go out from there, right? So I might just say, I only want to see the stocks that CEOs and CFOs are buying for obvious reasons, right? They would probably know best. I mean, I like to think, right? So I might look at stocks like those first and foremost. So yeah, that's Open Insider, and you can sort it. Obviously you have all these other filters. You can sort it however way you want. So yeah, I try to rely on this pretty heavily. I even have like a little shortcut here for every stock that I either currently own or I'm looking into. Like there's Activision. Let's see if they bought before the acquisition announcement, March 23rd by one director. Let's see. When did they, okay, I guess he bought after. All right. So nobody was in the know, I guess. Let's see, or maybe these guys knew well ahead of time. Oh no, they bought at a higher price. Okay. So there's no weird insider activity. But yeah, I like to have these shortcuts here. I got like a Yahoo Finance. I'm big about shortcuts, particularly when I type them out in my browser. Like there's Open Insider, for example. I have there's Yahoo Finance, so yeah, those definitely help, and you can kind of you can customize those in Google Chrome. Like, let's see. Settings. Where are we looking? Maybe search engine? Okay, yeah. So you can set up your own shortcuts here. So if you go to settings, I use Google Chrome because everything I need to do, like it's easiest to do through Google Chrome. That's basically the only reason I use it. But yeah, if you go to settings and search engine, and what was that? Manage search engines in site search. You scroll down and yeah, you can set up these shortcuts. And I think you just need to put the link in, right? And you can set up whatever shortcut you want. And then, like I have all this Google Maps, cost to borrow. I'll look at stocks that are being heavily shorted, or I'll just look to see what the short rate is on a stock, like, or I'll use my shortcut, CTB, spacebar, GME. So, oh wow, short fee is 10% as of today. Oh, it's pretty high. Or I guess it's been that high. Okay, it's been higher. Never mind. That's pretty high. So yeah, this is another thing I'll look at. Not necessarily to screen for plays, but if I'm just curious about the short interest of a stock, and I want to see how much short sellers are paying to short a particular stock. So yeah, that's one of my shortcuts. I would say open interest, open insider, Yahoo Finance, and cost to borrow. Those are probably the main ones that I use. So, but yeah, and this is iBorrowDesk. I think it gets all this data comes from Interactive Brokers, and it's typically updated every 15 minutes. Sometimes it's not working for whatever reason, but yeah, I'll use this here and there, or maybe this stock I want to short. Then I'm going to see how much it costs to short it. So let's see, what else do we have? Covered funds. Looked at ticker.com, Finviz. I think that's, for the most part, that's kind of how I screen for stocks. Value Investors Club, covered that. So yeah, other than that, I'm just gonna look at news, and for those, like here, my trading overview. Obviously, or as I mentioned earlier, my watch list, that's my primary method of screening for stocks, right? Yeah, so Open Insider, by the way, is only for US listed stocks. There is a website for Canadian stocks. Let's see, it's page not found. Is it working? Oh, I guess that doesn't work anymore. Maybe it doesn't exist anymore. What's the website? Canada Insider Trading, or Canadian Insider. Okay. Did they change the site? Maybe they changed it. But yeah, you can look up Canadian stocks here, like Vermilion Energy. I'm in that one. Okay. Wait. Was there buying? Oh, wait, there was. Oh, very nice. Oh man, they bought it at a high. We had some buying down here. So, no, I don't want to share anything. Oh, yeah, I'm using ad block and whatever. Okay. But yeah, point is, you can check insider transactions for Canadian stocks on this website. What else? FINRA bonds, not necessarily for screening, but well, I guess this is more on the sources part of the video. I will want to check bond prices of basically every stock that I'm looking at. If it's one of the bigger stocks, I'm just going to assume the bond prices are good to go. Like, I don't think anyone's questioning Google's bond prices, for example, But the smaller stocks, like you can see BBVY there, that one's interesting because, it obviously is a hot stock to look at, right? But let's look at the bonds and see what the bond holders are saying about the stock. So this is interesting. So let's go for 3 months. I think, yeah, BBVY was still in play then, right? Or people were still going crazy over it. Let's do year to date. So as you can see, bond prices have just tanked since March. And as more news was coming out, as they were getting financing, we had these little spikes, right? But the bonds expiring in just under 2 years are trading at 41 cents on the dollar. Let's see, 40 cents on the dollar. That's not a good sign, especially when you have less than 2 years left. I mean, one way you could kind of see it is maybe this is close to the percentage, I guess, chance that the company just goes under, right? Like they default in their debt. I think it's best to just kind of use it as an indicator rather than a percentage, but this is pretty bad. So anybody that was looking at Bed Bath & Beyond, if you just looked at the bond prices while the stock was squeezing and everybody was saying, oh, they're going to turn around the company and blah, 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 and the markets don't understand this and this and that. It's like, you know what? Bond investors tend to know more than you. So, yeah, this was not a good sign. And at no point was I thinking, even when it came up to what, like 55, maybe because bond investors said, you know what, they're probably going to issue shares, right? And then maybe they didn't, or did they? I don't even know. But honestly, my analysis stops here, basically, because I already glanced at the financials. Now I'm looking at the bond holders, and it looks like nobody's actually bullish on this company. It seemed like a pump and dump in hindsight, to be honest. So to kind of compare that, since I think it's a very good comparison and why I'm very curious about bonds in general, let's look at GameStop. So those are the 2024 bonds. Or actually, let's go back real quick and look at what do we got? 2034. What are those trading at? Those are oh my goodness, those are trading at 22 cents on the dollar. So that's terrible. Okay, let's look at GameStop specifically. I think we can see what they were trading at. Okay, this is a 5-year. Okay, this is when they issued. I'm trying to see when, I guess pre-squeeze, or maybe like during the COVID recession. Let's see if the 2021 bonds were, how those were looking. Okay, so there's a COVID recession. Okay, so during the COVID crash, when retail was being shut down, in-store retail, which was GameStop, right? They didn't have that big of an online presence. The bonds are trading at about $70, 70 cents on the dollar. That was during the COVID crash when retail was shut down. $70, 70 cents on the dollar with, what was that? Okay, a little less than 2 years left to expiration, right? 2021 versus Bed Bath & Beyond trading at 42. And there's no, sure, markets are going down, but retail doesn't shut down. Retail actually did well over the past, through August. So you can see a massive difference. And then as the market started recovering, the bond prices recovered too. So, and we can go back to those, those 2023 bonds and see what those are trading at. Those are trading above, they're trading above par. I guess because of that fat yield, right? But and these, okay, so these mature pretty soon. So yeah, in like 6 months. So that makes sense because you're going to get a fat yield, right? So clearly, even when these bonds were issued, they were a little low, $80, 80 cents on the dollar to begin with. But that went up pretty quickly. So even down here, if this was the norm, right, $80 to $87, it's a hell of a lot better than where Bed Bath & Beyond their bonds are trading at. So yeah, I'll take a cue from the bondholders just to see what they think about how they feel about a certain company, because they will get paid before shareholders, right? And if they're trading bonds, below like 70 cents on the dollar and there's nothing really crazy going on, maybe that's something to look into, But also if the financials don't look too great and the markets have been just, sending the stock lower and lower and lower, but the bonds are trading at, say, like 80 or 90 cents on the dollar. Bonds expiring in 2-3 years, right? Maybe that's a good sign. Maybe it's a good time to buy. Then I might look at technicals, long-term technicals. Maybe I'll look for some other stuff, right? This is all just part of the whole analysis process, right? So I'm not just looking at bonds, but this will be support for a position entry on any stock that I'm looking at, particularly for the stocks that are maybe distressed. So or financials don't look too hot, right? Or maybe the industry, like home building, for example. Maybe the industry doesn't look too well, too strong right now. So yeah, I definitely always look at bonds. I think it's kind of a must. There's Moody's. I look at the credit rating reports. I have like emails set up, a little subscription. I think you can sign up for these emails. You just need to have an account. So yeah, those are good. I think like credit ratings. I think right here, ratings actions, stuff like that. You can look at the rating methodologies just to see. So I think it's important to look at them. S&P and Moody's, they don't have the best reputation, depending on how far back you go, but they typically give pretty in-depth analysis for their ratings, right? They specify. It's always about liquidity and leverage. So yeah, that's definitely a good source that I track often. I get those emails as well. Finviz news. So this is nice because it's just a steady RSS stream that is just going nonstop, right, every day. So here I can just quickly look at headlines and make a judgment call. Okay, do I want to look into this? Chamath, Spat King, I don't care about him. Stocks getting hit with yields, multi-year, maybe something here. OPEC, supply shortfall now stands at 3.5% of global oil demand. So that's a pretty big deal. So there's deficit, right? So maybe I want to look into stuff like that. I actually already read that. But yeah, this one's just good just for overall news. And it's not like, like an app where it's just showing you really big pictures and videos and whatever. It's like, I just want to see the headline and I'll decide whether it's worth looking into. Like, oh, here we go. Total Energy. I'm actually invested in them. So yeah, that's actually interesting. So I want to take a look at that. If I was rich and had Bloomberg. But yeah, there are ways, some of y'all know how to look at that. But yeah, so Finviz news comes in very handy. It's typically like, let's say these are the tabs I always have open, basically. So Finviz news, next one is sectors and industries. This is Fidelity, and they'll just tell me, let's hit refresh, make sure. Okay, this just tells me which sectors are outperforming or underperforming. So real estate is the laggard here. Tech is leading. So that's interesting. I'm actually kind of bullish on tech at these prices. So yeah, this is, it should be obvious as to why this is useful. And do they give weighting recommendations or that? Oh, no, they do. Okay, whatever. I don't really care too much about that. But yeah, you can go out 5 day, 1 month, or you can sort by that rather, and it shows you, it shows you the relative performance. Yeah. So a lot of people have been saying, energy, it's time for a pullback. Energy is overvalued. Energy's gone too far. Blah blah blah. Look at the performance from energy. 3 years starting to look good. Look at 5 year. 5 year, it's the second worst. 10 year, it's the worst aside from real estate, because real estate is relatively new as a sector classification. So maybe you have some long-term investors looking at energy and saying, you know what, I think you're terribly wrong when you're saying energy is overvalued, or this is it for energy. So yeah, stuff like this I'll look at here and there just to see how sectors are doing, but particularly for the day, I want to see what's outperforming, what's underperforming. Maybe I know what to look into. Like maybe real estate is starting to price in a steeper housing correction, right? So maybe it's a good time to look into those housing stocks. So yeah, that tab's always open. Economic calendar, this is always open. I feel like you have to track events, because especially when you're trading, short term. because, you know, what do we got? Was it tomorrow or let's see. Tomorrow? Yeah, tomorrow is interest rate decision. So you might say, oh, you know what? I'm going to make this short-term trade on Tesla or whatever. And then Powell comes in, he says, oh, we're raising rates by 100 basis points. And there goes your Tesla trade, you know, or hopefully you bought puts, right? So it's really important to pay attention to the events. I like this website because it gives like everything. Like, you can look at basically the entire world, which is a lot. So you'll have like these endless lists of events, right? But you know, you can also narrow it down, right? So I like looking at the Eurozone. I look at Japan, China, and because I'm curious about those as potential investment areas, right? Or for example, Nintendo's like my biggest holding, so I am definitely curious what's going on in Japan. But yeah, you can do all sorts of stuff. You can sort it by high risk, medium risk, low risk, or importance. And next 7 days, just specifically tomorrow. So yeah, it's a really handy website. And again, all these sources, I'm going to drop them in the description. So let's see. Is there anything else very important? Market watches, economic calendar. It's just simpler, really. But you get more information from the other one. Let's see, earnings. This is just NASDAQ. You just, you know, type in NASDAQ earnings and it'll bring up the earnings calendar. And you can check, you know, this week, next week. But yeah, I don't think we have anything big coming up. General Mills, Lennar, their housing or real estate rather. So yeah, earnings, that's an obvious one, I think. Let's see, correlations. I like to look up correlations for stocks that I'm either like building positions up and I'll compare them to other stocks, or like I just recently did a Tesla Rivian pairs trade. So there I basically came here and this correlation is going down actually suddenly, but this was 0.93 when I entered the trade, and I basically went long Tesla, short Rivian. For, you know, reasons. And I'm not necessarily bullish on Tesla at this price, but I'm quite bearish on Rivian, particularly at this price. And yeah, you can check correlations, maybe set up good pairs trades. And otherwise, you can just, like, say you wanted to be long Tesla and you wanted to be long Nintendo and, I don't know, Occidental. And let's throw one more. Is it not recognized, Occidental? Oh, let me go back to, I think it's a different menu or whatever. So Tesla, yes. Nintendo, yes. Occidental. And then what's that? Consumer discretionary, industrials, or energy. I'm still not sure which one Tesla's in. Occidental's energy. And let's do something not so crazy. I don't know, Kroger. Let's do Kroger. Just for speaking purposes. I'm not even in Kroger. So here you can look at the correlations. Is this, can I get some dark mode here? There we go. Okay. So you can look correlations of holdings in your portfolio. And I think this is pretty important because you might be loaded up. You might just be long, essentially like one stock, you know, if all the correlations are the same. So, you know, incidentally, these stocks, they're not very highly correlated. Occidental to Tesla is 0.63. So I think a lot of people say, yeah, that's fine. You know, that's no big deal. When you start getting, you know, everything's over 0.8, then it's like, okay, maybe your stocks are going to all move the same direction always, right? So let's do Tesla, Rivian. What else we got? Let's try ChargePoint. That's not ChargePoint. What? Here we go. It's dancing. ChargePoint. What else? Is Fisker still around? Or did they already go bankrupt? I don't even remember the ticker. What are some other crazy? Let's do Enphase because that's kind of similar, right? So let's look at those. So look at this. It's just green across the board. Tesla and Enphase, 0.95 correlation. So if you're like, oh, I'm picking Enphase over Tesla, maybe you're picking the same freaking thing. so it's pretty important to look at these, I think, especially when you have a lot of stocks that are similar, in the same industry, so on and so forth. Or even if they're not in the same industry, they just might move the same, So yeah, so I think it's good for looking at your actual diversification in terms of price movement, rather than not like, oh, I'm in consumer staples and I'm in tech and I'm in all the sectors. Not like that. I don't think that diversification actually works that well, or not as well as people think, as Wall Street says. I think it's bullshit, to be honest. But diversification strictly in terms of price movement, correlations. So yeah, and this is helpful for just managing your portfolio and looking for pairs trades. So yeah, this is something I go to quite a bit. This site is free. All these sites are free. I think I mentioned that, but yeah. And there's some other sources I won't go into. This one is nice. I will say something about Portfolio Visualizer, another free one, and you can test like certain strategies over a long period of time. And like, let's say you wanted to see how the S&P compared to the Dow. And let's say you could set up your portfolios here. Let's say you had one nothing but S&P, one nothing but Dow, and then a straight mix, right? And it'll tell you what the performance was over time. So like right here, and it'll give you all these metrics too. So this is a very useful website. I don't know if too many people know about it, but I use this a lot. And this will also give you correlations as well. And yeah, so it gives you max drawdowns, the worst years, and depending on whether your company has existed, it'll cut the time frame. So like if I were to put I don't know what's a new stock, Rivian. If I put that here, and I said 33. I'm just using Rivian because I know they just IPO'd. I think it's a god awful investment. But okay, let's just make it 34. So Rivian, so it's gonna cut the time frame to, looks like, end of December. So it'll automatically do it. It'll tell you right there. But yeah, here you could do 10 symbols. Actually, you could do more. So you don't even have to pay for that. So yeah, there's a lot of stuff you could do here. I strongly suggest checking this out if you're trying to test like long-term strategies or anything like that. So this one's really great. But yeah, I'll use this one quite a bit. And the main website has some other tools, a whole bunch of other tools that you can use. I won't go into those, but you guys can do some exploring. But yeah, I think those are basically all the main tools I wanted to talk about. Maybe there's a Fed. This is the Fed Watch tool, predictions on what the next rate is going to be. This is showing 75 basis points, 100 basis points, so 84 versus 16%. That's useful. Trading Economics, very good website. I get a whole lot of data from this. I just look at, Bloomberg, just check the markets, APAC, EMEA, look at commodities. So yeah, a lot of these they're just a bunch of other sources, news links, etc. FDA calendar. I don't actively trade pharmaceuticals, but I used to, so that's why this is here. But I don't know, maybe I'll go back into doing that. Oil price today, it's a good one. I don't think there are too many bias articles. They're usually just reporting figures, data, and actual facts. So oil price is actually pretty good. EIA, I like to see what their reports are, and kind of compare them to other reports. Let's see. Yeah, so Seeking Alpha. Oh, M&A news on Seeking Alpha. That's pretty useful. There's Trading Economics again. So yeah, I think I'll probably include all those in the description because I find those pretty useful. But yeah, I think other than that, that's basically there's the 10-year 3-month spread which I track as a recession indicator. That hasn't inverted; it's getting close, but yeah, I actually track that one every day. Pretty good indicator over the long term of whether we're gonna have a recession. You can see it's the bold black line is where is the point of inversion, and at least since what is this, 1982. Every time it inverted, we had a recession. Looks like within the next 2 years. So, in the shaded, the gray shaded areas, those are the recessions. You can see the brief COVID recession here. So we're hovering around that time period. Let's see, go to year. So yeah, this is something important to look at. The fact that it's just sitting here, it almost inverted in the beginning of August, but the fact that it's just sitting around here is bad. So I won't go into that, but that is something I pay attention to. And basically, when bond spreads go down, when the spreads invert, money is being pulled from long term to short term because everybody wants cash, and that stunts growth over the long term. And that's why GDP ends up falling. That's why we end up going into a recession. You know, less hiring, less lending, less growth, right? So yeah. And that's just something I track daily. So yeah, I think that's about it. I will talk about the watch list in another video. And yeah, that's basically my screening process, and the watch list will kind of cover a little bit more about how I screen. I mostly just wanted to go over the numerous sources I use, and there will probably be a few more sources I point out in the video about my watch list and about spreadsheets that I use, how I have this set up too, in particular, because there's a lot going on here, and it's highly customized. So yeah, there'll be a lot for that. That's why I'm giving it its own video. And yeah, overall, this is the sources that I use, everything I look at. It's not a science. I've mentioned that in the other videos, but it's all just part of the process to ensure I'm not making poor investment decisions. So as I mentioned, I'll include all the sources in the description, and I'll post that other video about the spreadsheets. Hopefully within the next day or two, and because I know there were a good amount of people asking about that. So yeah, if you have any questions on this video, on the sources, on my screening process, just let me know in the comments. So that said, thanks for watching. I'll see you all in the next video. Cheers.